We're going to be featuring First Solar. You can see that back over here in 2011, you know, there was a lot of talk about the subsidies that Germany was going to have and lots of various different things. We can see the amount of haircut up here at about the 175 handle all the way down here, where First Solar over lots of years have had great support. Now, it closes at 129.42. That's where the close is. That's ultimately going to be always that high end of that support, but we're going to gap up. We're going to be gapping up into these moving averages, these weekly moving averages. It had an upgrade. There's coverage on the solar sector today, and the amount, and we'll have to do our yearly formula, Brian, playing on this one, and we'll have on our SMF focus list, and what the risk and reward ratios are and where the gap is. 129.42, meaning that $7.85, that when the gap pulls back about half of the distance or less, that the bears are stuck on the opening bell, and that when we do get the intraday pullback, that the bear would buy the cover to panic out, and that would keep this First Solar trade very, very, very elevated intraday levels. Kind of like the Sinas and the Baidus were doing, and the Amazons were doing, and the Caterpillars and the BIIBs and the FFIVs and the Googles were doing. This is the same event. And once again, it's always going to be about stop management, re-entry, stop management, protecting capital, protecting capital, protecting capital, and working with the application, and protecting capital, and resquaring. So what we're going to look for is that on that initial gap, is there can easily be a buy panic, panicking out of the short, that could take us right up into these key weekly moving averages on the opening bell. It is 6:12 a.m. Pacific Standard Time. It is the last day of June. And we've had one up week, and we had, over the last couple of months, the markets have corrected real well. We talked about stocks being heavily shorted all the way down, like this one and like all of them were. But then again, how do you take advantage of the bear? You took advantage of the irrational, exuberant bull when things were overbought and they had to come down. We did. Now, on the flip side to everything is, how do we take advantage of the pessimistic bear? And how does that bear in market cycles have to buy the cover on these big gap ups? Okay? Just like they did on WYNN, W-Y-N-N, on the actual weekly ranges. And these are all weekly reversals right here, my friend, on First Solar. And we like the fact that it's above that 10-week. It closed 4 weeks below it. It's a bear. This was really a deep bear trend. But now that bear trend is not as bear as it was, because now we're going to flatten out on the 10-week. We're going to gap up into here. We're going to find out what the ranges are from top to bottom, or top down and bottom up, and where that cycle is going to be. And how many people feel that First Solar can go all the way back up here over the next few months. It's a highly volatile stock. If an individual doesn't know how to keep the stock market order, which is mandatory, you can really have a bad outcome. But you can have a real good outcome by understanding today that First Solar is going to be its first day where that 10-week moving average, and I'm going to teach you guys later in the day that it's the dollar price movement above the 10-week moving average that also equates in the short-term strength of this trend.